So we've had a ton of questions about MicroStrategy in the forum and at Crypto Market Mentor. And so I just want to explain to you what they're doing. So they're taking the money from the bonds, buying Bitcoin, and then forcing the people who buy the bonds to convert that money into shares. Now that does cause some dilution, but the difference between normal dilution from doing a convert and what MicroStrategy is doing is that MicroStrategy is buying Bitcoin with that money. And the idea is that they are increasing the amount of Bitcoin you own per share of MicroStrategy every time they do a convert. And that brings down the net asset value. And so, for example, when MicroStrategy was trading up around $530, the NAV to the amount of Bitcoin they had was in and around 3. And so the stock was trading essentially at 3 times the amount of Bitcoin that they had. But every time they add more Bitcoin, they bring down that NAV. And so right now, because they've done so many buys of Bitcoin, their NAV is now down around 1.8. And so what Michael Saylor is trying to do by forcing these people to convert their bonds to shares is he's trying to clear out that debt, essentially. And why would he want to do that? So he can issue more.